All right, what's up, everyone? Sorry for this small delay. Had monitor issues. My old friendly monitor is now standing there, but grabbed a new one from elsewhere, and now we're up and rolling. So sorry about that. Thanks for hanging in. Let's dig into things. Let's first drop in the chat, maybe. Yelena, good to see you. Azashin, my friend, how are you doing? And what's up, A crew? 3 people strong in the chat. Let's see if it gets more. So time to dive into charts, some analysis. I'll probably also dive into the new fair value gap feature a bit because one of the ways I usually go around thinking of ways to make the feature better and more complete is simply by using it and finding out what I'm running against. Ekru already had was it Kuba? I'm sorry, I forgot, but it was Kuba, I think. I had a pretty good suggestion yesterday about using 30 minutes, but we're going to get into that. First, I want to dive into normal statistics. And with normal statistics, I mean the ones we're already using for a while, so the P1, P2 statistics. And then we're going to dive into fair value gaps. I'm sorry if I'm coughing a little bit. I've been a little, I've been a little sick these last couple of days, but still going strong. Anyway, so this is the INJ chart. That's the one I wanted to start off with because that one just had a crazy move. Shout out to Tim and the other guys in the Discord who actually managed to catch that. I mean, this is, you know, the fuck's that, right? Like, this is a crazy candle. This is not normal at all. It went right into this fair value gap right here. So we had this fair value gap here, which got, absolutely hammered. Fun fact, and this is actually something that we're going to discover on the reaction table when I make the reaction page, is that the vast majority of the time when you hit a fair value gap for the first time, you do not close inside the fair value gap. So it's kind of like what you see here. Again, this will be part of the other feature, but why not get ahead of myself? So here you see that first tap. Most of the time, I don't remember the exact statistics, but it was really a lot. I think it was like, I don't know, 70, 80% or something. You close outside of the fair value gap after doing that. But anyway, there was a reason we were looking at INJ, and that's something I want to get into together with all the other assets on what I'm going to do. You probably already read my analysis, so maybe before we do INJ, we'll go into Bitcoin and grab the analysis or the dashboard right there. So first things first, maybe a good one. Like I personally have this page right here bookmarked, so the summary page, so that I don't have to. I don't know why I didn't do that earlier, to be honest. Now I don't have to open the dashboard and then go to the multi-time frame summary page, because usually this is where I start, because I kind of want a good idea of like, okay, where's the market at, and this gives me the best direction of it. 8 hours pretty bearish. The weekly is still strong bullish, but I am gonna get into that. If you read my post, you already know what I'm gonna say about the weekly. But I want to see what the filter mode is like on conservative. A little bit less biased, a lot less biased actually. All right, so let me start off with this. The weekly time frame is very bullish in terms of statistics. Very bullish. Like we're seeing some crazy statistics. So INJ, so you know, it had that. Of course, is now at the 0.6 retracement after a massive wick like that. Oh, wow, that's actually crazy. So INJ still has 81% weeks with more distance. 81%. So let's actually check INJ. Put on the Minoma analytics indicator. Maybe get all the way there. Yeah, this is, I don't know, like this high is clearly an anomaly. So I don't know if I would count it or not, how to do with it. To be honest, I have no clue what is because this doesn't happen every day, right? A wick like that. This is a crazy wick. So I don't know if I would treat this normally. Like for me, this is already an anomaly. So there's already an anomaly within the statistics. Like I don't think you're going to see this candle much more often. But what is definitely true is that we usually see a lot more displacement than what we are currently seeing. Although we are in a little bit of a chop environment at the moment. Last week was also very involatile, as it seems. So INJ, maybe I would just let it skip because yeah, this is such a weird move. So I'm not that interested in catching it. But there are some other statistics that are also very interesting, right? And I have a couple of things to say about it. First of all, um, there's a couple of things I want to note. Let me see which one I will start with. I will start with this one. So the reason why we're seeing now these crazy statistics, like for example dot, and what I mean with dot is that obviously you want P1s with bigger distance to be as low as possible and percent of weeks with more distance to be as high as possible. Because this means there's a low probability of taking out P1 and a high probability of taking out P2. Now, if you see something like 9.4% against 91.1%, that is bonkers. Like that is absolutely insane. I mean, that's really crazy. I kind of like, I almost have to look into that. Let me look into that. Let me go to DAW. Let us see. All right. 16.7%. So there, oh, that's because I have input mode set to manual. Let me change that. Yeah, so it's correct. Yeah, that's crazy. That's actually crazy. This is actually crazy. So, this is really great because that means that only in 9.4% of the time would we take out the weekly P1, and in 90% out of weeks would we see a further displacement. I mean, let's take all the weekly P1s from here. Let me see on the bottom right. Yeah, I mean, you can see that indeed it rarely happens that everything in red is a P1 that is further away than what we currently have as from P2, and there's not a lot of red. So this doesn't happen. I mean, these are all the weeks, and here you can see it really well. These are all the weeks where you can see how far the weekly open P1 was from the weekly open. 1.9%, 0.1%, 5.3%, 1.0%, 4.1%, 2.7%, 0.7%, 3.5%, 6.4%, 0.3%, 6.1%. That's really not a lot considering that if you look at here that, well, let's take this area. Well, it doesn't really matter, but you know, the displacements are much higher. So when you see something like this, what it means is, I kind of call this, I don't really have a name for it, but there is a ratio between this metric and this metric. And the bigger that ratio is, so this is a very big ratio because there's a very big difference, the better it is for us. Because what does it mean if you translate it into, normal TA terms? It simply means that Polkadot, in this case, has a tendency to put in the weekly P1 very close to weekly open. Historically speaking, this is just what it does. Now, that's a very good thing. The other reason why we're seeing this, because previously, for me, this is the first time I'm seeing this, and I was already expecting something like this to happen. I just didn't expect something this extreme to happen. Like, this is crazy. It's just crazy. Let me go to Polkadot. But the reason why it's happening is because I wouldn't, let me, plot twist, I wouldn't long it actually, and I'm going to get into that later. But the reason we're seeing this is because I pushed an update not too long ago, a couple of weeks ago, maybe, or maybe 1 month, 2 months ago or something, where I said I changed some things on the filtering, right? Basically, what I did is that I removed Monday only from the filtering. So at first, we had automated filtering, which would remove the Monday if P2 was later. So then this would be the statistic, 21.9%, right? And I've already laid out the reasons why I removed it, so I'm not going to repeat myself there. from the weekly time frame, just to very shortly summarize it, because just too little data on the weekly time frame to do it, and also it actually makes a lot of sense to include the Monday, because you just get a, that's also why they have the hybrid filtering on the other ones. You actually get a pretty realistic picture on where P1s usually get put in, so that the metric is still very, very, very accurate. So you can definitely still use it, and in fact, there are scenarios where you could definitely argue it might work better. So anyway, because of that change in the filtering, I already said we're probably going to get way more signals on the weekly now. Well, that's what's happening now, and probably more bigger ratios. And again, it's not the other one, which have to, like, these are, how do I say it? There's no such thing as true probabilities. We were talking about that this morning. But if you get to estimated probabilities, which is what we're trying to do here, then not applying any filtering, what we're doing on the time frames, would be normal estimated probabilities, and conservative, doing the filtering is just a more conservative estimate. So if you would ask me which one is more realistic, like in terms of just like the holistical view, actually this is more realistic. So not applying any filtering, as in that it gives a more realistic estimate of how far it usually is from the weekly open. So it's long story short, it's very fair to use it this way. But that's the reason why we're seeing this right now. These massive differences in P1 and the, how do you call it, weeks with more distance. But I mean, that it was going to be this much difference, crazy. Because here, look at the other ones as well. This engine coin 4.3 again, 81.5. Wild. Even this one, not bad as all. LTC 6.0 and 66.7. Not bad. Also not the best, 66.7, but still not too bad. LDO 7.1 against 85. Now, and so on. But here comes the kicker. What I wouldn't do, and what I already said this morning, is that the very important thing for me, or let me put it like this, it really depends on your trading style and strategy. You could 100% and definitely say, all right, I don't care about this, about the TA, and I'm just going to follow the statistics, because realistically speaking, if you do this on Polkadot, and if you do this just every time you see a statistic like this, over the long run, you're going to turn out okay, right? So or you should turn out okay. It's completely dependent on what your preference is. However, for me, when I see this, it's like, okay, we're at a 6-month downwards descending channel, right? Which clearly has been acting as resistance for a while now, right? We had, pretty much tap here, tap here, tap here, tap here, and now we're deviating kind of above it. But it's clear that this has been resistance. Now, do I think the breakout is looming? Yes, I do think so. I do think we're going to break out, and I do think price is going to go much higher. That has been my bias ever since here. I just sat here, okay, we need to cool down, and then we'll go higher. But I've also learned that when you're in a range, it is much better. So this is, some downward sloping consolidation. So it's a form of a ranging environment. But it's always better to assume you're not going to break out of it, because a range fakes out way more often than it breaks out. What I'm trying to say is that these statistics, while great, we have to take into account the fact that Bitcoin leads the way. If Bitcoin drops, altcoins will drop. And Bitcoin right now is at the premium zone, right? At a premium zone, this is just the way it is. If Bitcoin, would have had these statistics here, it would have been a different story, because you're, somewhere at the midway, or even here, in a more discounted area. But right now, we're already so high that for me, it would be very risky to, or at least a lot more risky to take the play there. And besides that, what you also have is that a lot of these alts had really big retracements, right? We're seeing 0.8, 0.7, 0.7, 0.8, really, really deep retracement. So if I was going to choose anyone, it would be the ones without a deep retracement. So this would actually be Bitcoin, which I think has a better chance of making new highs than altcoins if I look at it. Unless, at some point Bitcoin is going to break out. I'm not saying it cannot happen. If Bitcoin just breaks out from here and just does this, then yes, for sure, everything is going to go to the moon. But like I said, it's just statistically, probably better to assume it won't happen until it does. You will just be right more often than you are wrong. So for me, I just have to stick with that, even though I do think the breakout is coming closer and closer, and I also think the elections have a big part in that, but we'll not get into it. But what I wanted to say is that so you see that Bitcoin is at this resistance point, and you see that at the same time, Bitcoin is holding up quite strong, as we can see here from the retracement vibrate. It's at the point 0.2 retracement on the weekly. Ethereum as well, one of the bigger ones. Top two coins are still at the top, but the other alts are all at very deep retracement. So this is telling me that okay, even though these statistics are very good, apparently altcoins are a lot weaker than Bitcoin is at the moment, right? They're underperforming, relatively speaking. You probably also see that if you go to Bitcoin dominance, which is probably also, yeah, it's also going up. I mean, this, like I've been saying for a while now, the same here. Just assume it will keep going up until it doesn't, right? You'll be much better off because, I mean, it's been going up for forever. So, those two things combined, that price Bitcoin is at range highs, right? We're at these premium values. Let's see where the volume profile, also at the very area high. This is usually not the spot where you want to go mega long. Uh, yeah, if the other alts were holding a bit better, I would have considered it. But personally, I find it tricky. But once again, this is all up to your trading style, right? I'm not saying you absolutely shouldn't do it. I'm just saying this is something I'm taking into account. But it depends. Do you want your trading style to be purely statistical, which is something we're going to work towards, right? If we're working towards it. Or, in my opinion, it's best to apply your TA, whatever that may be, and combine it with your statistics. Usually that gives the best results from what I've seen in the field. And for me, the TA would be saying, well, right now we are at resistance. So, we are at resistance. So if ever we were going to see one of these crazy flips happening, because you have to understand, right, that already we're at 0.8 retracements for these altcoins. So Bitcoin doesn't have to take out the weekly low for these altcoins to take out their weekly lows, right? Bitcoin needs to do probably something like this, and the weekly lows are gone. So how likely is that? I don't know. We are in this local uptrend, but like I said, we don't need a full-on reversal. With that said, though, if we go into Bitcoin I do like because it is. Let's see, current P2 Wednesday. It has been 24 weeks since Wednesday was a P2, so Wednesday is a very, very unlikely P2. You can see here that the Wednesdays are indeed decreasing. This is dot. Let me press Bitcoin. See Wednesday orange line. See Wednesdays again, Wednesdays. So you see that Wednesdays are not happening a lot at all lately as a pivot. So what are the odds that this is going to be a pivot? Probably not much. So in that sense, you would say that okay, we could take out the weekly high. Actually, it seems much more probable to take out the weekly high than not to take it out. The only question is what will happen after. So are we going to do this, keep going up, or we could do something like this, and this would still stop out all the alt plays, right? That's why I'm cautious on those alts there. But once again, each their own. I know some people are looking at DOT. Let me actually look at DOT, because DOT did fill this demand zone right here. Was this fair value gap? Just got filled. I think it's completely filled, almost filled. Yeah, and this one is likely to get filled soon. So yeah, it could be worth a shot. Could be worth a shot, but just remember that if Bitcoin drops, and Bitcoin doesn't need to drop much, then alts will definitely ruin the party for alts, right? And that's just my reservation right there. But with that said, I do think it's much more likely for Bitcoin to continue higher because what are the odds of this happening on Bitcoin? Obviously, a lot less than that to happen on altcoins because you just need a lot less distance. Let's check what Bitcoin is doing. Here, so Bitcoin, 7.9% of weeks would take out the low. I don't think that's going to happen. 72% would see higher. And yeah, so I have to say, I do think Bitcoin is going to go higher. It just makes more sense. So with that said, you could definitely try to get into one of the alt positions, but I would be, yeah, I'd be careful. I'd be careful. For me, this is not. It is very clear that this is not the ideal place to go into mega longs. Preferably it would have been a little bit further down, or we have a confirmed uptrend, which so far we have not because we're in a confirmed mega range and we're at the highs, right? So for me, if I would have to choose, I would personally stay out of it because we're simply at so much of a premium area that I'd rather not risk it. But I also see a lot of merit in the idea where you're saying like, well, the statistics are really good. For example, on DOT, 9.4% against 90%. I'll take that any day of the week. And if I get stopped out, so be it. Next 10 times, if you're, or 9 times more or less, you probably won't be. So there's also something to be said for that. And obviously the RR on DOT right now is potentially insane. So those are my 2 cents on the altcoin plays. There's many more plays like this, but personally, I would maybe feel a little bit more comfy on Bitcoin and Ethereum because they've shown less weakness there, right? So Bitcoin, Ethereum. Kind of crazy candle was that? Oh, that was yesterday's fuckery. I remember. All right, so this is a nice one. Ethereum. Let's see what this fair value gap is going to give us, shall we? Let me first check the chat. Nothing going on the chat, so I'll just go to the fair value gap feature. Let's see what Ethereum is going to give us. All right, I'll go to the 4-hour time frame because that's where I spotted that fair value gap. I'll go to Ethereum, and there you go. This is the fair value gap. So I'll press it, and then we'll see that this bad boy is already quite old. 28. It is 28 candles old. Candles old, I must say. So what are the odds of filling that thing? Let me check. The next one was, so I have to press this one. And I'm doing that because I see that the confirmation close, here the confirmation was closed over the previous wick. And I know that there's an effect. Although to be honest, I think there might be a bug in this one, so I don't think I should look at this right now. I'll fix that later. I think it might actually be the other way around what it's doing. Yeah, I think so. Oh, no, no, wait, it is good. Never mind. But I'll double check it just to be sure. But so right now we are at this 24 candle. We are still, very much in an area where candles get filled. And we're definitely, in terms of distance, in an area where candles tend to get filled. Then if you consider we are in a range, let's check something. So mitigated. Yeah, so here I just want to see, are all these things getting mitigated? Yes, there are. So these are all the fair value gaps here, and you can just see, it's pretty safe to bet that they are getting filled, and we're pretty much in a ranging environment there on the 4 hour. If you look at it, and they tend to get filled much sooner rather than trading environments. So it would not be a weird idea at all to say, okay, let's scratch ones that got filled very late. And then I'll delete this one. So basically what I'm doing here with the age of fair value gap, I'm just like removing all the fair value gaps that have reached an age, so that didn't get filled within 500 candles. And in that case, that's basically what you're doing is filtering out the ones that get put in very trending moves where price doesn't come back for a long, long time. And then we see, yeah, I don't think it necessarily has to get filled because they tend, on Ethereum at least, they tend to get filled much sooner than 28 candles. If we look here, yeah, if it's gonna happen, it's gonna happen in the next 10 candles or so. But that's still 40 hours. So Echo came with or Kuba was it with a good note that it's probably better to look at lower time frame ones because 20 candles on a 4 hours is a lot of time. Whoops. These are all the hourly fair value gaps of the last years. It's not what I wanted to do. That's what I wanted to do. Yeah, okay. So if we're at this point, I'm like, okay, that doesn't really need to get filled anymore anytime soon because you see the slope on this is just so low. So yes, things get filled, but it's like really spread out. Like the remaining 10%, or 9% even gets filled. I mean, on a very spread out basis of the fair value gaps. So this one not necessarily has to go down on the hourly at least. The 4 hour is kind of the same thing. Could last for quite a while. 40 hours is 2 days, or no, it's even more. It's 80 hours. A couple of days that it could take. For 28 candles. Yeah, so it is still in that slopey area. Yeah, to be honest, it further signs away my cautionary stance. I could see a point though. That's also why I'm using it because like the reason why I'm not talking much while I'm doing it is because I'm thinking because I could see something happening where if at some point you get a lot of open fair value gaps in a row and they do not get closed. So for example, here a lot of bullish fair value gaps that don't get closed before X amount. It's kind of the same thing as what we're seeing on Bitcoin right now. I could see that then that might be an indicator that you're gonna see higher prices because they are not getting filled. Something I might include. All right, so which fair value gap is that? Oh, October. I think that one's pretty far down. Okay, but that one is so small. I wouldn't even, this one, I wouldn't care about that. I'm gonna add an option on how likely it is. How likely it is to, or that you can filter on the fair value gap size. But if I, so this is what I'm talking about. If I see this, fair value gap, fair value gap, fair value, all these bullish fair value gaps drilling now below, these should have been closed a long time ago, but are not. I could see that there is a case to be made that these are stronger. And I already have some ideas of implementing some statistics for that. But for now, I don't think I would make any conclusions out of this. I'm also, I'm just using it to monitor it. I want to learn how these things operate, but it would be a little over eager for me to now start making very fast conclusions. But if I were a betting man, I would say there's a decent chance that this fair value gap is going to get filled on Ethereum. So that's let me repeat that. Where's this thing? There. So this one right here. Because also Ethereum is, yeah, it just starts the very area high. So the same thing, for me, it's also not something I want to do. So if I see very area high and we have like, pretty, these fair value gaps tend to get filled pretty around this time, especially distance. 74% of fair value gap or fair value gaps don't see further displacement than what we currently have. And at the very area high, again, not something I would bet on. So yeah, everything remains the same. If I can actually do this. Let me do it like this. Weekly summary. Well, I do think that Bitcoin could be in for a new weekly high. I just personally would not bet on it because of reasons mentioned. We are at this, massive premium area, so it generally isn't the place to look for longs. I think what would be much more interesting for if this would happen, that either this would happen and then this would be a nice place to start looking for shorts, but you have some more confirmation because you know trapped a lot of people, probably went back down. And then when you enter this range again, probabilities are going to be a little bit higher to have a rotation towards maybe the midline. If, for example, you see something like this, then that's also like a confirmed breakout. Because if you look at it, we so far have very high, very high. Well, let's class this as one high. Let me see this one. Class that as another high. So there's one high together. And we see so far we're only making lower highs, right? So it also further proves that, yeah, I personally wouldn't take any longs on the weekly. I personally wouldn't take any longs on the weekly because of all the reasons mentioned. Yes, the statistics are good, but like I always say, I do like to combine TA with statistics, and the statistics are good, but TA doesn't line up. Therefore, unqualified in my opinion. Let's see. And so what I did earlier is that, well, let me actually just quickly check the chat. No, we're still all good. But what I did earlier in the chats where I said, okay, well, what about daily statistics? for bearish ones. Then I mentioned Doge, but I see Doge already went down. So earlier in the chat, I said, okay, what about some bearish, because of these reasons why I said, okay, I personally wouldn't go for it. What about some bearish statistics? And there's actually quite some who have it, and I picked out Doge because it was looking really nice. But yeah, so far, it's no really reason to go into it at the moment, or at least you can make a plan, but there's no retracement at this point. So, there's no reason to go into any shorts. But Doge was nice because this one I mentioned in the Discord earlier, a little bit too late. It still looks like it could go down more. I think I mentioned it, maybe a little bit too late. I think I mentioned it here or something, just as it's started to go down. But so this one looked nicer, right? So my bias is actually more. I mean, I just find it very difficult to become very bullish at range highs, right? That's the thing. So even though statistics are telling me higher, which again you can choose to follow it because over the long run you probably will be right, but just applying some basic TA can prevent you from going into trades you shouldn't have gone into. And for me, that kind of is a very good situation, a very good example that we're seeing right now, where TA does not line up with statistics, therefore stay out. The conclusion is that right now, even though statistically we look very primed for higher, and we might get it, I'm not saying we will not get it, because I do think the breakout is getting closer. I also think it is better to assume the breakout will not happen until it does. So since the altcoins already bled so much compared to Bitcoin, I also think that the probabilities are lower higher for the altcoins to take out the lows than it is for Bitcoin. Therefore, I would not take these. And if I would focus on anything, it would be either if I want to go for weekly highs, which on Bitcoin is likely, but we can take out the weekly high on Bitcoin and then drop without the altcoins taking out the weekly high, and the altcoins actually taking out the weekly low because they're relatively not that strong. If I would go for anything, it would be Bitcoin, Ethereum, or Litecoin. The only thing on Ethereum is we have that fair value gap below us, which often gets filled. But we're talking about the next 10, 40 hours or something. So the next 2 days. That's why I should really implement the 30 minutes. So to be honest, man, if I concluded this for me, let me check multi-time frame. Because the 8-hour was pointing down earlier. Let's see what it's saying now. From bull in the hour. The hour is almost up. So we still have that 8-hour pointing down. Let's see actually on 8-hour what we have. Do conservative filtering. Yeah, nothing too great. Maybe sushi. I mean, yeah, INJ is crazy. So cost already had too much of the replacement. Doesn't make any sense to look at it. Compounds actually, or Pendle. It's crazy Pendle coin. And compounds and sushi don't look too weird on the 8-hour. We still have 3 hours to go. Compounds, 41 days since Pendle 1. So we check Pendle. Yeah, I wouldn't get in the wave this. Pretty impulsive. It's also not the best stats at the bottom of this mini range, it seems. Let me check. Yeah, once again, same thing applies here. Assume deviation rather than breakouts. So no compounds. By the way, if I'm not saying that Bitcoin cannot go higher and that alts cannot actually go higher. Actually, they can. And statistically speaking, it is way more likely for that to happen than for it not to happen. I'm just saying that I personally prefer not to act on it in this fashion. Compound looks a little bit better, and we have these fair value gaps. So compound actually, you could make a case. So compound could be interesting to go down further on the 8 hour, something like this. You know, fitting this first little fair value gap, this tap of this fair value gap would be nice. I'm going to get statistics on 30-minute fair value gaps. They will be useful. I don't have them right now. So a short, intraday short on compound looks something worth looking into, but I'm sticking with statistics. Oh yeah, and this one definitely. Look at that. Even though you are at this, well, let's check where we are. Yeah, no, never mind. We are at the lows of this range. So this one, I mean, you do have a very strong move here, but we are at the lows of the range. So once again, assume fake out rather than breakout. So that's actually funny because you see that a lot of the assets or alts are at bottom of ranges, even though Bitcoin is at the top of a range. That's the same here. Not really for DOT. I know Lush is in DOT. I think Lush took a long on DOT. More at the high of a range. That's interesting. And the alts are very much moving decoupled from Bitcoin. All right, so I'm going to leave it at this. I do think higher is statistically likely for the week. I do think Bitcoin is going to take out the weekly high because that is simply more likely. I do think that, maybe it would not be weird that even though we're so high to take a long on Bitcoin targeting weekly highs. However, if I just look purely at TA, I don't think it's the best location. So in that sense, I would tread caution. We'll see which one wins, the TA or the statistics, but pure statistically speaking, as high as possible. So I do think it will actually happen on Bitcoin. It just statistically speaking just makes sense. But even if we go higher on Bitcoin, the only way I could see alts play out if it's Bitcoin really moons, and since we're at the top of the range, you could see something happening where you take out the high and then just drop, and this move will probably already take out the lows on the alts. Therefore, I'm not interested in the alt plays except for Ethereum and although no Ethereum not I don't think it looks too good, but some Litecoin maybe because it also hasn't. It's just I would look at the ones that are behaving a little bit stronger now. Oh, and Litecoin is already going actually. Litecoin is already going. So this is maybe good to mention at the start or at the end of it is that reason I'm saying this. So JTP had a really good thing about when he looks at daily stats. He noticed that if price or if it's 50% of what I'm going to say, if prices retrace more than past the 0.5, so after more than 0.5 before the New York Open, usually that's not a good sign. I would translate this also to the weekly, where if you're just over 50% in the week, so that's where we are now, and price has retraced more than 50%, so 0.8, 0.7, then that's way more risky. And therefore, as what I said at the start, I would focus on the ones that are a little bit stronger, right? So that's Bitcoin, Ethereum, and Litecoin. And in this case, Litecoin is already taken off. Unfortunately, I didn't check it on time, but I wouldn't have had time anyway. Yesterday was the entry right here, but they look better, right? They look better because they look relatively stronger than the other altcoins. So for Litecoin, the same goes. If Bitcoin has a rejection of that weekly high, it can drop. It seems to drop with Bitcoin. So this kind of drop will not stop out Litecoin, right? But it would stop out Bitcoin. So conclusion, I do think weekly highs are in play for Bitcoin. I'm not sure if they are in play for altcoins. The only reason that would happen is if Bitcoin would moon after taking out the high. And I guess this was just a very long story for I prefer to sit on my hands at these levels. And that's just the way it is. That is the way it is at the moment. But it will be interesting to see what's going to happen. At some point, you would say we need to break out of this range. So let me check. What's up? What Wyckoff Insider? What's up, dude? Gonzo, old name. Good to see you, man. You're crushing it. You are crushing it. Good to see the grind. But for me, the question I have, like open question, is asking to myself: if you see this accumulation of fair value gaps, of open fair value gaps at the bottom, what does that mean, right? Because if I look at the last time that happened, I don't even see the last time it happened. I mean, it will be difficult to see. What does that mean? That's something I'm going to dig into. Something I am going to dig into. It will be also interesting to see if this fair value gap will get filled. But I'll get into that. Yeah. So unfortunately, I think right now you just, the weekly is saying up, the daily is not saying much. And, or well, the daily had some bearish plays, which we spoke about in Discord. But unfortunately, there are no retracements at the moment. Maybe they will come later in the day. So then we can look at them. So it is what it is. The market gives us what it wants to give us. And I think the only thing we can. Yeah, so some people are in this that long. Yeah, I personally wouldn't take it, but each their own. I could definitely see it. I mean, you could definitely statistically make sense. Makes a lot of sense. But yeah, I don't think the market is in the best place right now. I don't think the market is in the best place. Once we break out of this, then easy mode is back on track, and then we're gonna have such a great time. But yeah, once again, final conclusion. I do think this weekly high is targeted. So let's see if we get it. Let's see if we get it. All right, guys, I'm going to leave it off here. 2 streams in 2 days. Think it's good. Wyckoff, I love data. Good, man. Well, there's a lot more data coming. We should get some data on TCT models. Right? It looks epic, man. The stuff you guys are doing is really cool there. In due time. Much to gather data on. Actually, one more thing I want to check here is on these fair value gaps on Bitcoin on the 4-hour. Yeah, I'm gonna change these graphs. I'm actually gonna zoom them out. $43. Yeah, so that's the thing, right? So you see now that this fair value gap right here, these below here, like I mean, they're pretty old. 44 4-hour candles. You can see if you have 20 more candles, only the difference in between these is only 1.5%. So within now and 20 candles from now, 1.5% of these fair value gaps tend to get filled. So to me, this means you're already at the point where this fair value gap has a very high probability of staying open for quite a bit longer. So so these are something I would not say, okay, these are going to get filled anytime soon, right? So my question once again is, okay, if that happens, is there a high probability for the subsequent fair value gaps like these? Is it almost like a bullish fair value gap structure that you're putting in, if you may, right? I'm going to dig into that. That's just an open question to myself if we can find something there. I'm also experimenting with this new feature, so I'm going to dig into that, see if we can find something there. But I'm going to leave it here, guys. Thank you so much for watching. Elena, Aza, Ekpu, Wyckoff Insider. Franzo. I'm going to call you Franzo, old school. Thank you, man. Good to see you in here.